is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. Hey, John, what's going on, brother?
Hey, Tom, good afternoon to you. How are you?
I'm doing great, man.
I want to thank you, first of all, before I ask you about the star, you and Tim Ward and all the gang at TFNN. I had a really, really good year after the October call you guys made. My 401k is up 72%.
Congratulations, man.
A couple of things I made with Coinbase and other stocks that I made, and I've had a good year.
And we appreciate you growling and prowling with us, man. That's a beautiful thing.
Now, Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. This is the 3 o'clock show, and my usual show is the Tiger Technicians Hour, 10 o'clock to 11 o'clock, and my opening call newsletter is my daily newsletter that goes out to subscribers every market day. And on the weekends, I spend about an hour doing an overview on what's happened, what we're looking at, what stocks we are looking at, what positions we want to take for the coming week, what's the outlook. And just to go with that, I may as well do this right now. I'm doing on tomorrow night, in fact, I'm doing a webinar. It's for opening call subscribers. You can become a subscriber. It's easy enough. You can sign up. That means you'll pay the fee, but it's refundable. If you're not happy after the month, you can just call up and you just cancel. So it's Tuesday, March the 19th at 4 p.m. Technical tools needed for the coming few months. And one of the reasons why I want to talk about the technical tools is I want to talk about the technical tools, how the weekly charts are signaling that there should still be higher highs to come. Where do I anticipate that there'll be a problem, and what the socioeconomic aspect that I always like to talk about that has to do with skyscrapers and all other things like that. I'm going to be talking about the plethora of round numbers. It's just incredible that number of round numbers we've seen. Also sector rotation, stock selection, live questions and answers. But let me just show you something right here. So this is the Dow, up 155. Look, the technicals so far are pretty good. The 9-period moving average is over the 14, but the MACD is starting to decline. The stochastics declining, on-balance volumes declining, relative strengths declining. The one indicator, called the indicator of last resort, is the 914, and it's still holding good in the daily chart, very strong in the weekly charts, all of them. Look at the S&P, SPX.X, there we go. Holding really well, prices way above the 9 in the daily chart. The 9 is over the 14, the little black line there. This is in the inside track propellant zone. It's right in the upper part of it. The MACD is starting to weaken. The stochastic is weakening at 70%. I love over 80%. I really think over 90%. Fabulous. That's what you want to see in a bull phase. On balance from the blue lines coming down. So I'm kind of... We've got some short positions, even a long intermediate term and long term, we're still very bullish. Just on the shorter term, we've got these positions, and they're kind of working. And what can I say? 438.95, up 5 on the QQQ. You can see very close to that 9-period moving average flipping. It hasn't yet, but it looks like it could turn a negative. Weekly chart is going to peak C. I'll explain that a little later on. Just basically in the Chapman wave methodology, when I get a buy signal that's upgraded to a buy mode, it says you should get to at least 4 higher peaks. Going peak A is the first, B second, C is the third, and then at least a D. And then you have to assess what's going on. Look at the IWM, the Russell 2000. Still no sign of leadership there. They've done okay, but they haven't done great, not like the other indices. Let's go to gold. Gold itself is trading quite nicely, up 2.5. When you consider the spectacular move from the 200-period moving average in the day, look at that orange line. Whoosh, it goes straight up from the 2000 level right to the 2200. Now it's pulling back 2163. No big deal, but it has taken 1, 2, 3, 4, 5 sessions to consolidate. Using time rather than price, holding steady here, holding the inside track propellant zone in the weekly chart, and it's at a peak C. There should still be a leg D to come. Looking at silver, here we go. Silver is trading. We've got it down 12 cents at 25.25. This is a peak C. As I say, there should be a leg D still to come. Weekly chart says, hey, this is very nice. We've seen a lot of these U-shaped patterns retrace and then fail. But so far, the technicals in the daily chart are holding very nicely. High-grade copper had a really screamer of a few days, and now it's still higher, 4.13, up 0.008. This is very strong action in the daily and the weekly. Monthly says, oh, yeah, we need a lot more before we're impressed. Let's go to the bonds. And the bonds, this is going to be very interesting because bonds are down. That means yields are rallying. Is the Fed, what is the Fed going to say? I mean, we can see that there are inflationary aspects still around. If you look at crude oil is pushing higher. That's usually a sign of some kind of inflation. Remember, crude oil it filters into everything that we have. Just put the petroleum products. I consider that the petroleum products of the 21st century are the chips, are the new oils of the 1900s, the era of 1900, 2000. We've now gone to chips, and chips are everywhere. And look at the chips, the SMHs, kind of stalling at a beautiful rally to 239.14 a week and a half ago. Now it's at 219. Not a big deal, but it really is struggling. And it just says to me that this is what my webinar is going to be about, this rotation from one sector to the other. Look at this, BTC. BTC, Bitcoin futures, did a beautiful cup formation. It goes all the way from the 70,000s down to under 20,000, then back to the 70,000, a new all-time high. Because this is a leg C, that means there should still be a D in this year, 2024 Bitcoin futures. But it's got a little doji candle with a peak E right here. It's got this topping formation in the daily chart. Does this mean that Bitcoin could finally have a bit of a breather? Bitcoin bit breather? We'll see, because it's been spectacular. Look at this run. I mean, just almost a double in a month and a half. So is it also due for some kind of a break? What happens during the break? What's going to take the place of, where will money go? Where will fund managers go if they take money out? Well, maybe they'll move back from the Bitcoin, go back into the gold. Well, we don't know, do we? Because look, the dollar is acting well. EUR, USD, the euro-dollar currency pair, is kind of struggling here under the 200-period moving average in the weekly chart. Yet the USD JPY, that's the yen, it's doing quite nicely. Look at that. It keeps coming back towards the 150s. There's a 149.11 right now. So this is going to be a very interesting end, going into the end of March, beginning of February, April. April is going to be quite an interesting month, as far as I can see. So with that said, I wanted to do one other thing. I did the crude oil. Oh, the VIX index. Someone asked me about the VIX index. Yeah, look at the VIX index. It's been using this platform, this rising inside track propellant zone as a platform. It says that fund managers are starting to buy some insurance. It's at 14.29 in the lower range. But you can see, look, every week, higher lows and not always higher highs, but yeah, mostly higher highs. So it just says, be a little careful here. If there is a rotation, usually as rotations occur, you get some kind of a market pullback, and then you start to see which sectors are going to lead. I'll be back in a moment, and I believe I'm going to check to see. I think I might have Steve Rhodes coming in. I hope so. Basil Chapman sitting for Tom O'Brien. Dallas up 152, S&P's up 43. We'll be right.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, It has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Basil Chapman sitting in for Tom O'Brien, and we've got on the line Mastering Probability, Steve Rhodes himself, and his newsletter. And this is going to be very interesting because I'm sure that Steve has a lot of profound stuff to talk about right now about the markets. And Steve, how are you?
I'm doing great, Basil. Yourself?
I'm well, thank you.
So before we get into the markets, I know that you're a tennis player. I'm a golfer. I'm sure you're a much better tennis player than I am a golfer, though. And so this weekend, one of my favorite tournaments was on the TPC, kind of like the fifth major. But I also know, wasn't the Indian Wells tournament on for tennis? Is that kind of like a fifth major? Is that what the
You got me. I just see it when I see it. I love playing. In fact, I even snuck out today to go and play for an hour.
Oh, cool.
Yeah, but I watch it when I watch it. I prefer playing to actual watching, but I do watch, yes. But the Indian Wells have had some fantastic games lately, yes.
Yeah, I know. I think Alcaraz was Alcaraz and Medvedev. When those guys play, I didn't get a chance to see it, and I don't think I think it's just a best of 3 sets out there, not a 5-setter or something like that. Correct. But it's great. It's great to watch those guys play. They're just amazing.
The tennis these days, the last year has been my kind of tennis. They, Chapman. It's not just serving and backcourt. It's everything. It's fabulous. I love it.
Yeah. Yeah, absolutely. All right, so to the markets. And the question on everybody's mind, you sort of touched on this here, is, and I thought we'd spend a little time on it today, is trying to answer the question, has the stock market topped? So let's get into it. Each of the daily, so what we have up here are 8 different daily time frame cash index charts. So it covers basically everything. So we've got the Dow in the upper left. Next to that is the S&P, the Nasdaq 100, Russell 2000. On the row below, we've got the semis, the transports, the Nasdaq Composite, New York Stock Exchange. So the answer is yes. Each of these daily stock index charts have confirmed topping patterns. So if we take a look at the Dow up here on the left, Basil, I've got it with the Rhodes Momentum Indicator top. If I take a look at the S&P, the same pattern. Now, Rhodes Momentum Indicator top is telling us that the market is stretched to the upside, but being stretched doesn't mean it's topped. The way that we get a signal the market is topped, I let the market communicate to us, and the way that it does that for me is generates either bullish or bearish reversal candles. At tops, we're looking for bearish reversal candles. We had a bearish engulfing candle in the Dow Jones. We had a bearish engulfing candle in the S&P 500. The same thing in the NDX. The Russell 2000 actually generated what I refer to as a TD9 count top. The semis, a Rhodes Momentum Indicator top. The transports, a Rhodes Momentum Indicator top. Price and gap down, so we got a big gap out there. A gap to the downside for me is a bearish reversal candle. A gap to the upside, a bullish reversal candle. The NASDAQ Composite, bearish engulfing, Rhodes Momentum Indicator top. And New York Stock Exchange, a TD9 count top. So I could definitively say that each of these cash index charts has generated a topping pattern. So the next question should be, and the next question I like to ask is, where is support? So here again are the daily time frame charts, and I refer to the red horizontal lines that we're looking at as TD9 count breakout levels. So I'd mentioned as an example, if we take a look at the New York Stock Exchange in the lower right up here, this formed a TD9 count top. You'll see the number 9 count out there. We have TD9 counts, whether it's tops or bottoms. Right now, we're just focused on tops. It will then generate where price had broken out from. So it's a cool thing about the pattern is it helps us to identify that there could be a top or bottom forming. But then what it also does is it gives us this objective level of support. So in the case of the Russell 2000, what we've got out here is support would be at 2011, 90 cents. And then in New York Stock Exchange, be 17,603. So if we take a look at, this is the New York Stock Exchange. So we're just going to blow that up large so we can all take a look at that. And closing below a TD9 count breakout area would generate a change in trend. So this is taking a look at the New York Stock Exchange coming off of the October 2023 bottom out here, and this would tell us that we've got one price that we just simply need to watch, because pulling back to support, folks, is really what the market's always doing. This is in a bull market, pullback should be testing support levels, and in a bear market, rally should be testing resistance areas. So here I can definitively say if we see a close below 17,603.88, my preference would be 2 consecutive closes below that, then the New York Stock Exchange would generate a change in trend signal. Here's an example of New York Stock Exchange. If we go back to January 20th, 2022, which is where I've got my blue arrow, we can see that the New York Stock Exchange closed below that TD9 count breakout level. That gave us a change in trend signal. We had a second consecutive move below that. That was telling us we had a change in trend signal out there. Well, we can also see now what I've done on this chart is I've put up the TD9 count breakdown resistance levels. So support are the red horizontal lines, and the green lines are the resistance areas out there. And what we can see here is even though when price broke through back on January 20th, all rallies found resistance at a prior TD9 count breakdown resistance level. We did have one day where price closed above it. This is back in the April timeframe. This is why I use a 2-bar rule out there, because 1 bar can just be one of those beautiful one-hit wonder songs out there. And we want confirmation. So what we can see is all the way down, any rallies found resistance at those breakout levels until we got into this October rally when price was able to break through this 15,252 level out there. So that's how the TD9 count pattern works. It's an excellent time for folks that are listening in to test drive Mastering Probability. Comes with that 30-day money-back guarantee, because I do have a workshop that includes the specifics about the TD9 count pattern. So great time for people to test drive Mastering Probability. Now, the New York Stock Exchange is not something you or I can trade. We don't have an ETF. But if we took a look at that original set of charts, we saw the Russell 2000, which has a TD9 count top, has been approaching its breakout level. So what you and I also know is that if we were to see a close on the Russell 2000, the cash index, for 2 consecutive sessions, close below 2011.90, that would generate a TD9 count change in trend signal. So the New York Stock Exchange, I say just watch that for the general market overall. But on the Russell 2000, that should be the first one that if we are in the beginning of a protracted retracement, correction, whatever that might be, the Russell 2000 from a TD9 count breakout level probably gives us our first signal out there. So watch 2011.90. The XAU. So something, Tom writes a gold newsletter. We get calls all the time, right, about the GDX and the stocks with inside it. If we take a look at the XAU, so I'm just focused here, Basil, on the indices. I've got drawn a couple of TD9 counts. We can see 2 tops because there was one that formed just a few days ago. And then I've got a line drawn to a TD9 count bottom. That was the last time that we had a significant bottom inside the XAU. So this is a pattern that is certainly worth paying attention to. If we take a look at a topping pattern, which formed out here in this little rectangular bar, this is a bottoming pattern out here. I don't know why I put topping up there. But if we take a look at a bottoming pattern out here, when something bottoms, all that it's really entitled to do is go test resistance. Can it break through resistance out there? And for me, one of the resistance levels that I use is the oscillator and change line. We can see that this TD9 count that formed back in 2008 timeframe, I guess. I'm not sure the date of this. No, it can't be 2008. This is recent. So within the past few months out here, price ran right into resistance at that green oscillator and change line out there. And then it finally broke through. So here's an example of using the TD9 count pattern. And folks, you should consider test driving mastering probability. So that's what I see out there. Hey, Basil, one thing maybe you can cover during your show. So I show today that copper on a daily time frame negated a TD9 count top, and that suggests that we had higher. So I just ask you, how do you put that together, what Dr. Copper is doing and what I just shared with you on the cash indices?
Great question. We'll deal with it. Hey, Steve, thank you. Great to interview, and
thanks,
great
Basil.
work.
Appreciate it.
Thank you very much.
Take care.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi, folks. Basil Chapman sitting in for Tom O'Brien. We're looking at the copper. Well, we're looking at SCCO. I just interviewed Steve Rhodes, and really, his Mastering Probability newsletter is it's very comprehensive. He does a fabulous job, and he analyzes everything very thoroughly. And I highly recommend that service. We're looking at, so Steve said he's generating signals in copper, and I'm looking at this. So this is that leg D. Remember the Chapman wave? I said a buy signal gets upgraded to a buy mode. It should go to at least a D. It can go E, F, and G. That's the labeling of the alphabet sequentially in the Chapman wave sequence. But this leg D here, the stochastic is flat at 95%. That's fabulous. The MACD, the moving average convergence of the daily chart, is great. The relative strength index has just turned red. That usually signals, got to be a little careful because that's kind of an overbought signal. The real overbought signal for me, I usually use the on-balance volume. And that's the one that says we are a little overbought, but all the technicals are confirming. This is SCCO. The weekly chart has gone to a leg E. The monthly chart is still very strong. Let me just check if SCCO, Southern Copper, is at an all-time high. Well, at least since 2010 that I've got here, this is a high from that level. It's never been here before. So let's just go back to the G. Let me go to this at HG. That is copper itself. So let's go backwards. So the monthly chart, the long-term monthly chart says, yeah, it's a very good candle, but really we just stuck in a range. The weekly chart says, aha. Now you could start to do like an inverse head and shoulders. You can be thinking in terms of a cup formation. You can go to that high over there, go to this low over here. This is what I call symmetry. I'm going to be going through this in my webinar tomorrow. How do you do this? How do you measure these things? Well, I grab that left side. I go from that high that was back in April, I believe it was. I go to this low right here. This is the plumb line right here. The number of bars on the left could in fact equal the number of bars on the right. And let's just put this in place right there. And tomorrow I'll show how this is done in slow motion rather than the very quick thing. Then we have an inside wedge target resistance line right here. And this is suggesting, and then I make it green and I make it a dashed line. So there's a methodology to all of this. It's not just done haphazardly. Most of the time it's, I wouldn't say mathematical, but it's very close to an approximation of equilibrium, equal numbers or equal height. So here we go. And it says that the high that was made in high-grade copper in the continuous contract of 4.32 back on the week of the 14th of April of 2023, a year ago almost, could in fact have the next resistance right here at 4.23. If it's able to even have a pullback and then generate a punch to that level, that would say by next week 4.24. But it does say that high-grade copper on this particular pattern right now by mid-May should be tackling the high of 4.28. Did I say it was 4.32? 4.32. Now, where do we look for support? Well, this is almost a doji type candle. That's one area. It happens to coincide with the 9-period exponential moving average right there, which is trading at 4.01. And the lower down, 3.97 is the 14-period exponential moving average. So that's what I would see as a consolidation. So many of the things that we want to look at involve, let me just check. I think there was a question in the den. I just wanted to see I'm not missing anything. Yeah, I'll get to that. So what Steve was saying when he was showing his charts, he was showing there were lines, straight lines, and they were going from a particular point, like a little mini wedge going towards from the left side to the right side. And he was saying that it's generating some kind of a signal. Well, the way I look at it, and this is the way markets have worked for me and the way I've looked at it for decades, is that there's a synchronicity because of the negative news, the nervousness, the volatility index. Everything's pointing towards a culminating synchronous low. And we saw that October 27th last year. We've seen it. I mean, you can go back to almost any low, even the low of 2009, when there was a low made The Dow made its low on the Friday, major generational low. And the very next day, which happened to be after the weekend, Monday, the S&P made its low. In fact, I remember we got that low exactly on the diamonds. We bought the diamonds, held it for a long time. That was the Dow diamonds on that Friday, the 6th of March. Okay, so within that context, what we're looking at, pleasure, Steve. So let's do the next thing that we want to look at here. So, and then tops don't necessarily come together because each stock sector is generating its own cyclicality or secular aspect to it. So they rotate. Remember, back in 2000, January, I think it was the 14th, the Dow made its all-time high. It was March when the S&P and the semiconductors made their high. Well, what I'm looking at now is the SMHs. And I typed it into the wrong place. Let me type it right here. The SMH is the semiconductors, the Van Eck Semiconductor ETF. So it made a high of 239.14 on March the 8th. I really need to put that in. I didn't put it in because I wasn't sure it was the high, but it was a peak D. Remember, we were talking about Ds in the Chapman methodology, 3824. And what happened is it pulled back. It got to the green 9-period moving average. Then it took out the 14-period moving average right here. This is the daily chart right there. But it just bounced, but the bounce hasn't held. It's up for $1.49 today. So we have a short position via the 3-time short, just a small short position. We might add to it at a certain point, but right now this is a feeler to see because the weekly chart has made that long-legged doji peak E, pull back, but really hasn't done very much. It hasn't gone up, but it hasn't really gone down. So it's a work in progress. So I'm suspecting that I've got to, and this is what I'll be discussing tomorrow, I've got to be very flexible because tops are not synchronous. Bottoms are synchronous because you got that fear factor. Everybody, and throwing in the baby with the bathwater or whatever. I never liked that expression. Anyway, but the tops are not made. Tops are made because people are just dying to buy and they're buying and they're buying. Well, that's where we get the round numbers. And if you look at round numbers, that means that there's like ARM Holdings in the semiconductor area screams up to 164.00 on the 12th of February, and it's trading now at 130. So it's gone nowhere. It's gone sideways. I'll talk about that when we get back because I think it's going to be quite an interesting phenomenon.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Attention all opening call subscribers. Next Tuesday, March 19th, Basil Chapman will be hosting a live 90-minute webinar for all subscribers. From 4 to 5:30 p.m., Basil will take subscribers through an educative journey, giving insight into how he will approach this volatile market. Basil Chapman's opening call newsletter has a 30-day money-back guarantee for all first-time subscribers, and all subscribers get access to his trove of webinar archives, so you have nothing to lose. Go to the Newsletters tab of TFNN.com and sign up today. We'll see you March 19th. TFNN, educating investors. This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi folks, Basil Chapman. So I just wanted to show you with this black pound. It's a black background. You can see there's just one line. The line changes from green to pink. And as long as it's green, that's very positive. And look what we've got. This is the Dow. Look at that green line. So this is what I'm going to be discussing in my webinar tomorrow, how I can use a simple technique to be able to keep you into a trade as long as possible. Now, it turns out that we have a short position in the Dow, but it's based on other techniques. But in the meantime, the anticipation is within a couple of days, that green line is going to turn pink. That's the anticipation. What it'll do, we don't know. And you can see that's the same thing for the S&P. Here's the S&P. It looks still green from that March the 3rd, I think it was, March the 7th. November the 7th, 2023, flip to the green. Flip to the green side. Look at the QQQ. Changing a little bit. You can see the price is starting to have a number of bars underneath. Will it turn pink? We don't know. You never know, right? Look at that sharp pullback then and never went pink. This one, I think, has the potential. And look at the SMHs. Fabulous spike way above this moving average. And then what happens is it comes down and now it's starting to show a little bit of wear and tear. But that's all. It's had a spectacular run to the upside. So these are just different. Some of the things I'll be talking about. Here's another one. Look, I consider this to be fear of missing out. When you see AVGO, one of the great semiconductor companies, Vigio was this is the wrong one, AVGO, Broadcom, great company in the semis. Look at that spectacular move to a leg F in the monthly chart, a peak E in the weekly, a peak D in the Chapman wave methodology at 1418 back early March. And now look what happens. A little doji candle pulls back, and it's just turned pink for the first time, look, in ages, since it crossed. Look at that. When it crossed positive in December the 11th, even every pullback didn't turn it to pink. This time it's turned pink. So I'm suggesting, and I even look at this. Let's go to NVIDIA. This is really the king of all semiconductors. 974.00 round number all-time high. Unbelievable, right there. And it's pulled back 1, 2, 3, 4, 5, 6 sessions. In those 6 sessions, besides the fact that the day it made the round number high, it also had just the day before a round number open, and it's continued to have every once in a while. It's had round numbers. It had 912 round number high. I think it was 3 days ago. Yep, right over there. And I'm watching it closely because it's starting to stall. It hasn't failed. Therefore, this is a work in progress. But it's giving me clues to say there are certain areas. And when we talk about it, look at this. And I want to talk about this tomorrow in my webinar. I want to go through the let me just get that right, BKX.X. This is Berkshire Hathaway, BKX.B. This is the B shares. BKX.B. KX.X. What am I doing wrong for Berkshire Hathaway? Oh, BRK. BRK.B. Oh, that was silly. BRK.B. A round number, all-time high at 430.00. It had a 422 open on that day. What was the day? It was 26th of February. And here it is trading at 408.11. And today it had a low of 406.00. I mean, what's going on here? I think it seems to me fund managers are buying, but they're buying out of fear because they're just grabbing it. Surely you'd put in, I want to buy it at 406.10 or 30. You just says 406. Very few used to do that in the old days, but no one does that anymore. But they do. And it's all across the board. That's why I wanted to point it out. So tomorrow in my webinar, I'm going to be discussing the important difference between the XLF, where Berkshire Hathaway is. This is the S&P Select Financial Spider Fund. Beautiful cup formation. Look at this. Nice prime time sequence from the left side to the right. And it went from 41.70 January 2022 down to 29.59 in October. And the most recent high was in the 41s. It almost did it to the penny, coming back in leg B. So I want to talk about the difference between the financials, the money center banks, and KRE. Is this something that's going to haunt us? Is this something that's going to be a big problem? The KRE is the S&P Regional Banking ETF, makes a high in January of 2022 at 78.81, plummets down to about 33, and then comes 34 and comes back to where it is now at 47. Is there something wrong here? Is this the same as the IWM? Well, it turns out that the Russell 2000 does have a lot of regional banks. Just had to get a drink of water there. That's very important. So if you're looking for areas that have done really well, and the next areas that could come on strong if there is some kind of a consolidation, where do you want to go? Do you want to go to the regionals? And that's going to be a big question, something I'm going to try to deal with tomorrow night. All right, let's go to the GDX. I had a question about that. Yeah, GDX holding really well, 29.79, down 10 cents. It's gone. Now, this is a very interesting technique. I'll show it tomorrow, where I use the stochastic, and I've always, since I read Jake Bernstein's book decades ago, he used moving averages, and then I started to use different things, and I thought, oh, okay, I'm going to put the stochastic under the MACD, and then after a little while, I found that it gave a fantastic signal once in a while called the squash, and that's where the price comes down, retests the low, like this H pattern right here, this arch formation, and then the left side starts to see a little bit of a positive movement. But then the stochastic screams up with the price, goes from 20% or under 20%, over 80%, with the MACD expanding the distance between these two moving averages. That's the 9-period differential and the 26-period. And you get the relative strength of the gray lines, relative strength moving up, and the on-balance volume. And it says you can go very quickly to a peak A, then a B, then a C. And then you might take a little longer because why? The torque of the stochastic has to be handed over to the MACD. So this is a period just here, a little digestive phase. How long it takes, I think also depends on the euro. It depends on the dollar, and many things. But so far, this is good action, very good action on the daily. But if you look at the weekly chart, it's stalled at the 200-period moving average. It has this inside track repellent zone. This is the market vectors gold miners. So while I like the action very much, I need to see how does it consolidate. Are we going to get some gold stocks that actually pull back deeper now? Or let's look at Newmont Mining. Newmont Mining holding, doing nicely today at 49 cents at 34.37. It's going to peak A, peak B, and now it's just taking a little bit of time. Weekly chart looks terrible. Monthly chart looks horrible. So slowly but surely, we will see by the end of April, beginning of May, exactly where the gold stocks are, where gold is, silver is, where the dollar is. So this is a very important period coming up the next 6 weeks. Basil Chapman City for the one and only Tom O'Brien, Dow's up 100 points, S&P's up 36, starting to give back some. That's what we're anticipating for the day. We'll be back in a moment.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
You can see how the E-Mini is just pulled back. Basil Chapman sitting for Tom O'Brien. I'm the host of the Tiger Technicians Hour, 10 o'clock to 11, and tomorrow we're going to go through, in my morning show, I'll go through a bunch of the techniques we're looking at, and I will be doing them tomorrow night. Oh, I'll put that away. Tomorrow at 4 o'clock, I'll be doing a live workshop for my subscribers for the opening call. We'll be discussing, look, because it's at 4 o'clock, we'll have a little bit of time with the futures. I hope to be able to do the futures live to show some of these techniques. Look at this. Here's the 10-minute chart. Right there, when it was green, that could have been a buy signal right there back at 5 o'clock this morning. It was green all the way through until it turned down across negative. And now it's been pink and pink, pink. And look, here we are on the downside. So some of these techniques I'll be discussing. I'll do some of it live during my show, during my webinar, that is. And then what we'll be looking at is how you use the 9-period moving average and 14-period moving averages, how you use some of the Chapman wave notation, because you need that for the weekly charts that are still very positive, looking out, intermediate term, how you can use the different indices. For instance, I've always said the semiconductors are the ones that really lead markets up and lead markets down. They've been stalling. Will the market stall here? Thinking is yes. That's why we've got a short position in the Dow, just short term, because we're still long term long. We don't want to mess around with that. short the S&P and short the SMHs. So it sounds like, oh my God, they're short. No, these are trading positions. We have longs. We got longs this morning. They're doing quite nicely. And also I like to have, for subscribers, I like to have single digit, double digit, triple digit, whatever it is, for different price ranges to get in. If you can get something in the single digits that mimics what it does in the double or triple digits, it's great. You don't have to put so much money to work, and you can still have a very nice profit. So with that said, I'm just going to say have a wonderful evening. And I will see you tomorrow, at least for my show at 10 o'clock, Basil Chapman, Tiger Technicians Hour at 10 o'clock tomorrow morning. And as we wrap up, I'll do a market wrap. The Dow's now only up 72 and the S&P is up 31. That's still pretty darn good when you think. I'll be back in a moment with the update for the new